A recession can be the winning lottery ticket that you've been looking for. More than 5 million people became millionaires across the world in 2020 despite economic damages from the COVID-19 pandemic. More than 1% of adults worldwide were millionaires for the first time. And that recession only lasted for 2 months. Even your boy had a couple of the most profitable quarters during this time. And in this video, I'm going to reveal the millionaire secret to prospering in a downturn. You see, when economies take a hit, everyone's in panic mode. And it's natural. Jobs disappear, savings dwindle, and future seems uncertain. When most people see crisis, a savvy investor like you sees opportunity. Why? Because recessions reset the financial playing field. Assets depreciate, stocks become cheaper, and this offers some fantastic opportunities to invest. So how do you turn recession to your advantage? First, it's about understanding the market. As the saying goes, buy low, sell high. During a recession, many assets like real estate and stocks become cheaper. You utilize that chance and buy. You do your research, or better yet, seek advice from a financial advisor, because you know not all assets are created equally. It's important to know which stocks and real estate deals offer the best return on investment. But you might be asking, I don't have much to invest in the first place. Don't worry, I'm going to talk about starting from scratch too. Hi, my name is Tasvir Mirza. I'm a realtor and a diversified investor based in South Florida. And on this channel, I make finance videos recession-proof. Feel free to jump around the timestamp if you'd like to save some time. And while you're down there, consider hitting the like and subscribe button below. Consider this analogy. A recession is like a storm at the sea. You're a captain of a ship sailing through the sea of recession. You wouldn't go out there without a map, compass, or plan, would you? The same principle applies to investing during a recession. By assessing your financial situation, researching market trends, and creating a detailed investment plan, you can navigate the choppy waters of recession and emerge in a prosperous position. On top of having a strong plan, it's essential to continually upskill yourself and grow your network. Now, United States has witnessed as many as 48 recessions from the time dating back to the Article of Confederation time. In recent times, there were a dot-com bubble during 2001, 2008's housing market collapse, and as recent as COVID-19 recession in 2020. According to National Bureau of Economic Research, economic analysts suggest that a possibility of a recession in 2023 is high. While the US has not officially entered the recession as yet, there might be a slight possibility. Even though Papa Powell reported, the staff now has a noticeable slowdown in growth starting later this year in the forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. But a savvy investor like you already knows when the government asks you not to worry, that's when you should worry the most. Even if the possibility of recession is next to none, you are already considering your financial goals in order to decide your investment strategy during a recession. With the Federal Reserve increasing interest rate to combat inflation, analysts are speculating about an upcoming recession. Some believe that during a recession, the most beneficial strategy isn't to become conservative, but to be more aggressive. Focusing on assets with potentially higher returns, they argue that a recession is a great opportunity to invest due to the lower prices of stocks. However, they predict that the potential recession might not mirror the severity of a Great Recession or the dot-com bust due to the absence of similarity imbalances that caused the earlier crisis. It recalls the 2-month-long COVID-19 related recession in 2020, emphasizing that even a short recession can significantly impact investment portfolios and highlight strategies for taking advantage of a downturn. But not all investments are good. Later on this video, I will provide you on some investment that you should absolutely avoid during a recession. Investing in stocks. As stock prices typically drop during a recession, it's a good time to invest more. The market usually recovers after the recession, providing a chance for significant returns on investment during low periods. For example, despite 20% drop in the S&P 500 index 2022, long-term investors can use this as an opportunity to buy stocks at a lower cost, investing through tax-advantaged retirement accounts such as 401ks, traditional IRAs and Roth IRAs, or through individual brokerage accounts. Index funds tracking the S&P 500 are recommended as a simple investment option. Market downturns provide opportunities to buy stocks at a lower price, although investors should focus on resilient companies that can weather a recession. The historical performance of the S&P 500 during previous recessions and Warren Buffett's successful recession investment, for example. You want to consider 4 types of stock investment during a recession: healthcare and consumer staple stocks, healthy large cap stocks, funds that track specific sectors, and fixed income and dividend yielding investments. Healthcare and consumer staple stocks are typically more resilient during economic downturn. This is because people still required medical care, utilities, and food regardless of the economic condition. These companies produced essential goods like food, drugs, and hygiene products. Their sales remain stable in recession period because consumers still need to buy these items. Several of these companies like Johnson & Johnson and Procter & Gamble also pay dividends. Using a stock screener can help you identify these stocks. Investing in funds that track specific sectors as they can offer reduced risk compared to individual stocks by spreading investment across several companies. Consider fixed income and dividend yielding investments as they offer routine cash payments and can provide stable cash flow during recessions. Consider companies with low debt to equity ratio and strong balance sheet for reliable dividend stocks. Dividend aristocrat companies that have increased their dividend payouts for the last 25 consecutive years could be a good starting point. You can also consider stock funds. These include ETFs or mutual funds, which tend to be less volatile than individual stocks and offer a potential for high long-term return. An example of well-diversified stock fund is an index fund based on the S&P 500. If you want to learn more about ETFs, I covered that in this video. Diversification across asset classes can hedge against potential losses. It's also crucial to have a solid emergency funds for unexpected expenses or job loss. You want to dollar cost average your investment. This method involves investing a fixed amount in the market at irregular intervals, irrespective of the price of share. This technique can be particularly effective during a recession when share prices are dropping, as it allows investors to buy more share at lower prices, reducing the average cost per share over time. Purchasing precious metal as investments. Precious metals like gold and silver often perform well during market downturns. Their prices typically increase during recession due to increased demand. Investment in precious metals can be made by coins or bars, or through ETFs that focuses on precious metal market, or a gold IRA for retirement. I have a goal to get a silver, gold, and a diamond play button someday. I'm not sure how recession-proof these buttons are going to be, but it would be nice to have it. Help me get my play buttons by clicking the like and subscribe button below. Investing in real estate. Recession might result in a drop in home values, which could be a buying opportunity for you. Renting out a property during a recession can provide a steady income stream. Once the real estate value increases, the property can be sold for a profit. According to a financial planner, George Nicola, real estate can be a secure source of income during a recession due to its low correlation with the market volatility. Real estate sector offer income generation and practical utility. Although property prices might not necessarily drop, rising interest rate could dampen the market's upward momentum. The higher cost of borrowing might cause a drop in demand, potentially providing a good entry point for investors. Sam Zell made his fortune buying properties at a significant discount during the 1973 recession, demonstrating this opportunity. Investing in real estate investment trust or REITs can be a great way to earn passive income without actively managing properties. With people potentially downsizing or relocating during a recession, self-storage facilities may offer a steady source of income. This can be done by owning a facility directly or investing in REITs that operate self-storage portfolios. Here you can start investing from scratch. Becoming an entrepreneur. Consider starting your business, something that you've been putting in the back burner for a while. I know that's kind of scary, but recessions can offer advantages such as reduced competition. Seize the opportunity during a recession when competitors might be reducing their activities. Income generated from these businesses can be reinvested for a high return. Cut back on expenses. By reducing your spending, more funds can be invested and a safety buffer can be created in case of income decrease. Shop for lower insurance rate, eliminating unused subscriptions, and using coupon apps for groceries and household essentials. Minimizing high interest debt by negotiating credit cards interest rate or transferring debt to a high interest to a lower interest rate cards. As job losses mount and companies scale back during economic downturns, maintain a high cash reserve. However, careful selling investment prematurely for this purpose, creating a 12 to 24-month emergency fund as a cushion for potential job loss, preparing to borrow money by boosting your credit score and keeping credit accounts active, opening a savings account, opening a high-end savings account or certificate of deposit or CDs to generate passive income would be a good option in the recession. With rising interest rate, this could offer substantial returns. Cash can be good for short-term investment, especially in a brief recession. It gives flexibility, but due to inflation, it's advisable to keep cash in a high-yield savings account for strategic purposes. Here are some of the investments that you want to avoid like plague during a recession. Bonds. Bonds might be riskier in a recession as rising interest rate can push bond prices lower. While they might seem safe, once the economy starts growing again, interest rate will likely increase, leading to a fall in bond prices. Highly indebted companies. Companies with high debt loads are more sensitive to higher interest rate, making them riskier investments. They could face a decline in sales and potential default during recession. High-risk assets. Options and other high-risk assets can be unsuitable for recession due to the high level of uncertainty. Growth stocks. Steer clear from growth stocks, especially those profitless companies tied to high growth prospects. There you have it. Leave a comment if you have a specific strategy or tips for weathering a recession. Watch how ETF works and what are the top 5 dividend-paying ETFs here. As always, if you like the vibe, join the tribe. Thank you for hanging out with me. See you in the next video. But it'd be nice to have it. It'd be.